Hello everyone and welcome back to the channel, and I hope you guys are doing great. So in my today's video, I'm going to discuss with you about a company called E2E Networks Limited. We're going to go through their recent results and update. The con call still hasn't happened, and as and when the con call happen, I will go through that and make a video on that also. So before we get into the numbers and all the updates, right, I just want for the benefit of the new viewers, I just want to take you through in a very short way, what is the E2E network business model and what do they write. So I'll just try to keep it simple and very short. So let's take an example. You have a you start an you started a new company and a startup, right, and you want to build an AI app like ChatGPT, right, and for that you required powerful computers which are very expensive, right, to be you to to buy and to use it and everything. So what you or me will do, right, we'll go to E2E Networks and we will rent it from them. So what they do, right, so they have this whole network of GPUs, supercomputers with with the cloud facility, with their own software and everything, and they rent it to these businesses, right. So because we need to understand that now in this world of technology, and how the business landscape is changing, every business needs AI, to improve their overall data, to learn new things, and to how to stay competitive edge. But not every businesses are so big, or they have so much of money that they can go and buy these, or supercomputers, or build their own network of it, right. So what they do, right, they'll just come, they'll pay certain rent to E2E, and E2E will rent it to them. So that is their whole business model. So what are the advantages? So the advantages is, good thing is, like, there will be fixed cost when E2E does the whole setup, and then they start charging rent. So the rent will come up to a certain point up, and it will cover up the overall fixed expenses. But after that, what happens was, the fixed cost is covered. Everything that they earn is an operating leverage for them. It's like the margins keeps on increasing and getting better. Now, but what are the disadvantages of it, right? See, okay, they build everything, they have all the things up and running. Now imagine if people stop renting them, that could be a challenge, right? Because even if people are not renting, in order to ensure that all these GPUs, computers, supercomputers are running properly, they still have to pay for the electricity, for the cooling system, for the internet and everything. So that could be a challenge. So till the time people are keep renting it, and the how to say, the how the whole utilization is done up, E2 will not have any problem. So this is their whole business model. So let's just look at their numbers and how well they have done in Q1 of sorry, Q1 of FY27. If you look from their revenue perspective, right, it grew by almost 334%. That's just crazy. And if that is to YOY to 156 crores, and if you look from quarter and quarter, it grew by almost 64%. And if you look from there, EBITDA margin also, right? EBITDA margin was around 75.2%. That is crazy margin numbers. And the EBITDA amount was around 117 crores. And if you look at their PAT, they did a PAT of almost 400 and not 400. It's almost 43.9 crores with a 28% margin. And that's actually quite a good sign, because last year in the same quarter they did a loss. And if right now what the management said, right, that their monthly run rate is around close to 71.8 crores compared to 37.4 crores in March of 2026. So if you look at all the parameters, right, whether it's the revenue, whether it's EBITDA margin, whether it's PAT margin, or whether it's the monthly run rate, the monthly revenue that they're earning as from the companies or the businesses who are renting their services, is almost close to double. That is quite a good sign. And you can see the graph also, right? In Q1 of Q1 of FY26, the EBITDA margin was around 29%. Now it has gone up to almost 75%. That is it has almost tripled. And if you look at the PAT margin, right, Q1 of FY26 was around minus 8%. Now it has become positive 28%. So that is all are actually good sign. And so over here, personally, if you ask me, the numbers are just blockbusters for E2E Networks. The only thing that needs to see is, like, because they're investing so heavily in their business, right, how these thing progresses, and whether this thing continues quarterly on quarterly, or whether it will be up and down till the time everything stabilizes. Because we need to understand, because they are spending so much of monies on these GPUs and everything at first, and they have to they have to do depreciation also, which is obviously not the actual cost, but still it impacts the bottom line in terms of reporting it. So we need to keep an eye on that. And at the same time, if you look at their capex, right? So if you look at their capex numbers, if you can look at the screen, the capex numbers have increased drastically. If in FY22 they did a capex of around only 24 crores, then FY23 was only 25. Then in FY24, it increased to almost 185 crores. Last year, they did a capex of almost around 870 crores. Sorry, not last year, FY25. And in FY26, if you see, they did a capex of almost 696 crores. And this Q1 of FY27, right? They have almost done a capex of almost 177 crores. So this clearly shows, right, that the business is confident of the opportunities which are there and they are willing to invest because the capex has just gone through of the route. And in terms of the funds that they have raised and have utilized, whatever they raised in Q2 of FY25, Q2 of FY25 is completely utilized. Q3 of FY25, which they raised close to around, close to around 1,079 crores, out of which only around, right now is around only 30 crores less, I feel. And whatever they raised in Q4 of FY26, which was around close to 107 crores, as of now, the total balance is around 102 crores. So this is all they think. So if you look at it, right, the business is very confident of what is happening and what is the demand, and they're willing to invest so heavily over there. And if you look at their the GPUs, right? If you look at their GPU numbers, right? If you look at the screen above, right? In FY25, they had a GPU of almost close to around 1,900, and then they increased to 3,900 in last year, and now in Q1 of FY27, it has come to almost 5,100. So it is almost more than doubled in the past 2 years, right? And that is very good sign for them because the more the number of GPUs are there, the more data can be utilized, and these people who want to use for AIs, for the LLM models, that can be used. It's like this simple model, right? See, if I'm a builder, right, the more houses that I'm able to build and rent them, right, the more money I'll make. Same way over here, the number of GPUs that increases, the overall capacity for them increases, and the number of businesses which can rent them also increases. So over there, here everything looks going in the right direction. So if in short, if I look at the result, right, the results are fantastic, and it's not just the top line number, right? It's the margins. You can see the EBITDA margin improving, the PAT margin improving. At the same time, the amount of investments that they have done in the past 2 years have started, giving to say benefit from this year onwards. And at the same time, they still continue to invest. So they're doing overall great. So I just want to wait for the con call to understand what the management is saying and how does the next 3 quarters look. Are there any challenges, or things are going to continue in the same direction? But overall for E2, it's a really, really great result. Okay, and obviously I'll keep following this company in every quarters, and I'll keep you guys posted about this update. And if you like this video, please do hit like and subscribe to my channel. Thank you and God bless.